Thank you for tuning in to this week's episode of the Self-Storage Insight. I'm Ben Shirey. I'll be your host today. And today I'm going to have a little bit of a different interview. I'm going to be speaking with an industry professional in credit card processing. And this is going to be based off of a conversation that sparked on Facebook and some other forums that I'm in, where I talked about passing your credit card processing fees on to your customers, and got a lot of heated comments from it. And so I kind of wanted to just do an episode and kind of, pick somebody's brain that has a lot of experience in this field. And so today's episode, we're going to do a little bit different. This will be sponsored by CC Storage. And today we're going to talk about maximizing profitability. All right. Thank you for joining me on the podcast today. Today, I'm going to be joined by Jon Shirey. He is the COO of the largest statement analysis company in the United States, ISO Amp. And so they analyze credit card processing statements all day, every day. And Jon, if you don't mind, just give me a little bit of a backstory on what you do there and kind of what your company does.
Sure thing. I appreciate you having me on the podcast. So ISO Amp is a company that analyzes merchant statements. Any type of business, anybody that accepts credit card payments, they a lot of times will send those statements to us and our team, and we analyze those statements. We break down for the business owner exactly what's happening on their statement. We show them what their processor's making on the account, the actual pass-through costs on the account. And so we're analyzing hundreds of statements a day. We work typically with ISOs, independent sales organizations, and banks and ISVs, and they basically trust us to analyze their merchant statements.
Okay, awesome. And before we get too far and lose everybody with talking about credit card processing fees and all this deep stuff, kind of the point for having you on the podcast with me today was as far as credit card processing fees and how they relate to self-storage. I've been asking this question in some different groups and some different forums about passing these credit card processing fees on to customers, which seems to be a growing trend. It is gaining some traction in a lot of areas. Our area specifically, I see a lot of small businesses that are starting to put signage out that they're doing this kind of thing and passing fees through to their customers. And so I kind of wanted to bring you in today to talk about that specifically. And so, I'm really excited for the podcast today, and we'll see where the conversation goes. And then one other piece of it is I'm going to pull up my one of my Facebook groups that I was on, where I posted this question with some of the responses, and so we can answer some of those concerns that people have with this whole pricing model.
Sure.
It seems like everybody's super scared of it.
Awesome. Well, definitely pull out all the tough questions and let's dive into it. I'm excited to talk about it for sure.
Yeah. Awesome. So typically when you see a credit card processing statement come in, is there a specific percentage that you think like typical businesses are paying? What percentage of fees, over total volume?
Well, a lot of times the true cost of processing, again, there's so many variables to this depending on what type of business you are, how you're accepting payments, card not present transactions versus card present transactions, the type of customer that you typically have, at your location. There's a lot of variables that play into that. A lot of times, if for somebody that's just trying to take a quick guess, 2% is probably a lot of times the true cost of processing. But again, it could be much less, it could be much more. And then that's typically definitely not what the business owner is paying. That could be anywhere from 3 to 4%, as a pretty good standard.
Right. And if you look at your credit card processing statement, there's all kinds of fees that no one has a clue what they are.
Sure.
And so there's a lot of room there where they can sneak some hidden costs in. And I think maybe that's part of some of the reason that people are so cautious about the whole credit card processing, passing the fees on. They don't even know what they're passing on, or they don't know what they're doing with it. So they're just scared when they hear a name like Visa might come after you if you do this, right?
Sure. Yeah, and I guess one of the first things that I would say, and something that you brought up earlier, was that this program is now starting to be adopted, it seemed like, in your area. And one thing that I would want to point out at the beginning of this would be to make sure that everybody's aware this is not a new program.
Right.
Gas stations have been doing this for 50 years. I would say that this program is more rapidly adopted recently in the last couple years, especially with like COVID and things like that. Business owners are trying, in many cases, to find a way to keep their doors open. And so this program has definitely helped businesses potentially do that because they're eliminating maybe one of their biggest expenses as a business owner. So that's kind of where the direction is going.
Sure.
And, but it's not new. It's
Right.
definitely not new.
Well, so one of the reasons that I posed the question in that way, right, was somebody's response to me asking, and I'll just read the question here. It was, how many of you, again, this is to a group of self-storage owners,
Okay.
How many of you are accepting credit cards and paying the processing fee versus passing those fees on to your customers? Passing the fees on to customers is growing in my area within small business. And I'm curious how many of you have adopted that strategy and how it's going for you.
Sure.
Okay. So one of the first comments that came back to that was, big business can get away with this, not the little guys.
Okay.
It's too competitive, right? So how do you kind of address that? Like, for me, I kind of believe in that business model a little bit, to where that's not really fair. Like, I've been paying these fees with my big utility companies and with other companies for a long time, and I'm kind of just okay with it. But why does everybody feel like the big businesses can get away with it, but the small guys have this disadvantage where they can't do this kind of thing?
Yeah, sure. I may even argue completely opposite with what the comment was about how big businesses can't get away with it and small ones can. It might actually be the opposite way around, where big businesses, maybe it is even more relevant for them because they're literally paying thousands of dollars a month in fees. Now, one thing that I would say right at the beginning, especially when you read that comment, is, certain businesses are okay with passing it, certain ones aren't. I would stop right there and say that's, in my opinion, not true. In my opinion, every business passes the fees to the customer. Okay. Now, not every business does it in the form of like a dual pricing program or a cash discount program where they actually are passing the actual cost up a flat percentage to the customer. But in general, I mean, it's business. You're passing the fees to the customer because it's part of doing business. It's part of cost. Mm-hmm. And so, right, sure. Some businesses are actually passing that actual percentage to the customer, but other businesses are raising the rates. Other businesses are trying to make sure that they're profitable, and so they're raising the price of their pizza. They're raising the price of their hair appointments and their haircuts. Well, why is that? In some cases, it's because cost of doing business goes up. The electric bill goes up.
Right.
Hard goods goes up. There's the supply chain, it costs more than it used to get things delivered, and things like that.
Sure.
But in addition to that, the cost of processing goes up. And so, interchange, if you're not familiar with this, interchange typically goes up, twice a year. The rates change. Okay. And usually they don't change in anybody's favor as far as for the business owner. So I would like to say most businesses, pretty much in my opinion, all businesses pass the fees to the customer. The question is, are you passing it to just the credit card, people that are paying with a card, or are you passing it to everyone in terms of raising your prices?
Right. And so just to kind of touch base on this really quick, because this is a phrase that is going to probably get thrown around a little bit in this conversation. Dual pricing, whenever that comes up, kind of just give us an idea. What is that? What is dual pricing when you say it? Yeah,
so dual pricing is a program where typically the business or the consumer is going to be shown two prices. A lot of times that is going to be actually on the shelf of a store or something like that. It's going to be at the point of sale for sure, where they are going to put their payment in. They're going to see a cash price and a credit price. And if they pay with a card, they're going to pay the $103, and if they $104 or whatever the case is, and if they pay with cash, they're paying that $100. So dual pricing is just very simply two different prices. There's a cash price and there's a card price.
Okay. Yep. Just wanted some clarification on that, just because, that phrase will get thrown out here and
sure.
And people probably have no idea if they're not in the credit card processing game, what that means.
One thing to answer though, specifically the question about, the large businesses versus the small ones. A lot of times if somebody was to make that statement, they just don't understand that, a consumer is a consumer. Whether you have 100 of them or whether you have 50 of them or whether you have thousands of them, the bottom line is, are consumers going to care that much about paying the fees for a business? And I would argue specifically to answer that, I know we're going to dive into a bunch of other questions. I would argue that, it doesn't matter. The percentage is going to be the same versus a small client versus a large client.
Okay. Yeah, perfect. Yeah, thank you for the clarification on that. Yeah, one of the responses that I got a lot of were similar to this, and it just says, raise your fees and then pay the fees, or raise your rates and pay the fees.
Yep.
And so that was kind of the biggest pushback that I saw from this question was raise your rates and just pay the fees.
Sure.
Almost like don't stir the pot. right? Like they're scared to address this issue of passing these fees on to the customer and then showing an additional fee at the point of sale.
Sure.
And with the storage facility, it's going to be a little bit different, right? They have a monthly fee that they're paying versus they're not walking in and buying a disposable or a hard good. They're renting the unit for the month. And so they're kind of like, just raise your rate if you're that concerned about 3.5%. And to my thing is, well, yeah, then I've raised my rates, 3.5% on everybody in the whether they're a new customer or an existing customer, or whether they pay with cash or if they pay with an alternate payment method. So kind of what is your thought on that as far as that mindset is what we see a lot of?
So the question is, I think everybody would agree, accepting cards is very valuable for your business. If you're not accepting cards, whether it's self-storage or no matter what business you're in, people spend more with their card. People, like to use their card. They get rewards from their card. So a lot of times people that don't understand what actually happens when a payment is made with a card. For you, the business owner, whether it's self-storage or whatever your business is, there's different fees associated with different card types. And so if I walk into your business and I pay with my rewards card and I'm getting cash back, I'm getting all these benefits, you as the business owner are usually the one that's getting hit with those extra costs versus if I come in and I use a debit card or anything like that, especially if I pay with cash or a check. Well, so the question is, if we all agree that paying with a card is super beneficial for the business owner to accept, you're going to have more repeat customers, you're going to take payment easier, you're not going to have to worry about, somebody coming by and handing you cash, then who should pay the fee? To just come out right away and say, well, that's just the cost of doing business, raise your prices, and the business owner should pay the fee. My response to that would be, why? Why should the business owner be the one that gets screwed on processing fees when they are just trying to provide a valuable service to their tenants, maybe if it's self-storage, to their customers, if they're in the restaurant business or whatever the case is. And so, I'm very passionate about the fact that I think that a dual pricing program is best for the business owner, but this is maybe where I'm a little bit different than maybe most people that's going to be talking about dual pricing, or maybe that you've heard in your comments there on your Facebook post. I think dual pricing is best for the consumer. And that's probably what a lot of people would be like, what do you mean? How's that best for the consumer?
Right.
Well, to your point, what you had brought up was, this, and even this person brought up, why not just raise the rates? So to me, again, it's very easy to get stuck in that mindset of, this is the way that it's been done for 20 years, so let's not change anything.
Right.
But let's actually think about that. Like, why would that be fair? Why should the rates change for everybody across the board? Why should your customer that walks in and pays you $50 in cash, the 75-year-old man that comes in, he's just old school and he wants to pay with cash, why should his rates change when somebody else is walking in, they're getting 1% cash back on their credit card, they're getting all these benefits? Why should the prices be the same? And so I think that the dual pricing program is absolutely best for the business owner, because literally you're eliminating your number one expense. In many cases, even more so than the renting of their location, building, or their space. Credit card fees absolutely are ridiculous in the sense that they just really hand-tie business owners.
Right.
And so, what about the consumer? Well, I also think it's the best for the consumer, because now you're passing those fees to the people that it's relevant to, and you're not doing that to the people that are just trying to pay with cash.
Right. Yeah. Really good insight. Yeah. Very cool. Yeah. Very interesting. One of the comments here, and maybe you can talk to us a little bit about a dual pricing program and what it looks like, because this question was, I accept credit cards and just pay the fees. I find it too cumbersome and difficult to charge people the additional fee within their system. Yeah. Right. So how are we figuring out what that fee is and then passing that through to the customer without having to do a bunch of manual,
you definitely do. I definitely wouldn't suggest doing it manually. So typically, no matter what business you're in, it doesn't matter if it's self-storage or, whatever your business type, you should be working with a company that's handling your payments, and whether that's an independent sales organization, you're direct with a process, or whatever the case is. And this is not a new program. This is not something that only a certain handful of people can do. I mean, this is something that almost everybody can do. And so they should be able to set that program up very, very seamlessly for you through your system, through through maybe your POS system or your terminal that you're using to accept payments, or even your online gateway. And so that should almost happen seamlessly. And what basically happens, in a 30-second, rundown of how that works,
right.
When that customer pays, that additional fee is held. And then that fee at the end of the month is used to cover the processing fees that would be associated with those payments. So for the business owner, they shouldn't have to do anything. They should be able to accept payments. If their transaction is $100 and somebody pays with a card, $100 should hit their bank account, and it shouldn't have to be any manual work at all.
Okay. Very interesting. Yeah. Cause I know a lot of people have some questions on that, and they're, am I going to be sitting there, trying to figure out what was the 3.5%
right.
on this transaction and add it to the transaction before they run the card.
Sure.
And there are some new softwares that are already figuring this kind of stuff in, as far as, property management softwares and things like that I've looked into a little bit. So yeah, one of the questions or one of the answers on the question here, or the comments on it, was maybe you can think about different auto pay choices, like when you pay your taxes online or any other expense. When you pay with a credit card, there's a fee. However, when you pay e-check, there is no fee. You could look into this for your customers, and then can switch with credit card, and they could auto pay with an e-check or with
Sure.
ACH.
Okay.
Kind of how does that work, or what are some of the benefits of presenting that option?
Yeah, I mean, it's that's also not a new option or anything like that. I mean, if you pay with cash, there's typically no fee on like a dual pricing type of a program. If you pay with a form of payment like an e-check or ACH, there still is a fee associated with taking ACH payments. It's
right.
very small compared to like a credit card processing fee.
Okay.
So typically on a dual pricing program, you might be passing, 4% or 3% or something like that to the customer. For credit cards, and that fee might look like 1% or something, or 1 or 2% on ACH. Obviously, it just depends on who you're working with. But yeah, it's definitely far cheaper to accept those forms of payment. And those can happen automatically. I think to this commenter's point, they can happen automatically as well. Somebody can automatically ACH each month as well. So that's a big benefit. And again, that's, in my opinion, a huge pro for like a dual pricing option, because not only now is it cash or card, but there's, ACH and e-check and everything like that.
Right.
So yeah, I think it's a really good option as well.
If as we get into the ACH thing, because one of the follow-ups was about ACH, what is the different risk? Maybe you don't know the answer to this with it being ACH based, but like if an ACH payment returns versus, a credit card just fails, there's no fees with a failed credit card transaction, correct?
Well, there is fees with a failed credit card transaction.
Okay. As far as it would have the same interchange rate as the normal.
And I mean, sometimes the business owner is not passed back that fee, or they're charged that fee, but there's definitely fees associated with, failed transactions,
trying to run
declines,
somebody's recurring
like
auto
that, yes.
payment that doesn't go
Right.
through. There's a fee there. Okay. One of the other things, and one of the other objections that I kind of saw on this was, do you want the additional fee to be the last thing your customer sees and they feel like you're trying to fee them to death?
Sure.
Right. So how do you kind of say to that point, like you're showing an additional fee on the receipt or on the transaction, right? It's going to be a separate line item that shows the processing fee. I'm sure you've heard this before from the customer. How do you kind of answer that?
I would answer that and say, you're really, really overthinking this. Like, business owners that adopt a dual pricing program are not getting the pushback that they thought they would when they pass these fees to the customer.
Okay.
So if and typically business owners that do switch to a program like this have the ability that if they don't like it and it doesn't work, they could switch back to like traditional processing. Data has definitely proven that that does not happen. Well, what does that mean? Does that mean that they're losing customers over this fee that they're passing to them? Well, no. Obviously, if they were losing customers, they would switch off the dual pricing program and go back to traditional processing.
Right.
Well, why are they staying with it? Because customers don't typically care to pay that small percentage of fee. And the thing that you got to realize is, if you take a business owner that has $1,000 a month in credit card processing fees, or $5,000 a month, or even more, you're not passing that much to one individual customer. You're passing a very small percentage, 3 to 4% to that customer. So, this a lot of times is going to be a couple dollars or less than $1 or literally pocket change for an individual customer versus the business owner paying thousands of dollars. Why should that all be on the business owner? So, I mean, a comment like that, I would just say right away, like, you're really, really overthinking it. Customers are used to paying fees like this. They're the ones getting the benefits from it. And if they don't want to pay it, they don't have to. There's other options. That's the idea behind a dual pricing program.
I feel like this is something that a lot of people overthink.
Right.
Because a lot of the questions come back like, oh my goodness, don't you dare. Like, this is an untouchable fee that you can't mess with.
Sure.
You pay it and it's the cost of business. And that's what a lot of people have said.
This is business. Like, people are in business. And why you're seeing this kind of develop more and become more popular in your area is because when one business owner adopts this program, the person who doesn't adopt this program, they are at a disadvantage, whether they want to admit it or not. That's fine. They could say, oh, I'm not doing that. I would never do that to my customers. Well, guess what? One person is paying $0. The other person is paying a couple $1,000s a month. And at the end of the day, typically business owners, no matter what field you're in, it's probably competitive to some nature. So You're at a disadvantage if you don't utilize a program like this, especially if somebody else in your area utilizes a program like this. And that's why I tell people this program, this type of model where fees are passed to the customer, it's coming whether you like it or not. Mm-hmm. And so you don't have to adopt it. You can be bullish against it. I would never do that. You're taking the high ground. I would never do that to my customers. Well, you probably are going to raise your rates. If you're not, at some point you got to think about the way you're running your business. And you want to be profitable and you want to make sure you stay in business. And by the way, one thing else on that, I'm sorry, it seemed like you're going to ask another question.
You're good.
One other thing about that is typically when you have clients and when you have tenants in the self-storage business, or if you have people visiting your store and you're a business owner, they appreciate your business. That's why they're coming there. And they want you to keep your doors open. They don't want, we just had a local sub shop in my local area go out of business, and it sucked. And I would have loved to tell him, you should have done dual pricing and at least saved that $1,000 a month. Mm-hmm. You should have, even thought about raising your own prices, just to make sure, because you had a lot of loyal clients. People are for the business owner. And so I think that's one of the reasons why, most customers do not push back against this, because they are more aware that the business owner is trying to do what's best for them, and they're trying to keep their doors open, and they're trying to be successful as well. And so it's almost a way for them to just support the business owner.
Yeah. And I want to kind of just go back, and this isn't off of a question here, but when you said that, there's competition in business, right? I think that the self-storage industry as kind of a whole it's been growing so fast because there's so much need for self-storage right now. Like, the demand has been super high historically over the last few years. Like, it's just boomed with all the money that they gave away, and everybody needs more space, right? We're very high on the, right now everybody has a lot of money and they're spending it. However, as the demand falls, because everybody's building these units really quickly, it's going to become more and more competitive, and your rates are going to matter more. And so, like, kind of the reason that I wanted to bring this into the discussion was, how can we maximize profitability for the business without raising the rates, right? Because at some point, there's 8 local storage facilities within a mile of me right now. That per month fee is going to matter. And so when you come out and you list yours at $80, but I can list mine at $75 because I don't have to show that fee as part of the lease, that's an advantage that I gain over you as you're trying to raise your rates, and I'm trying to pass that fee through, at the point of sale, or, at the transaction level. So I think that the competition is going to require that this kind of becomes more adopted over the near future.
Yeah, sure. I mean, and there's a lot of good points to that too. And I mean, there's definitely, I know a little bit about the software that you guys offer to help self-storage property owners, and how you don't even have, fees associated with, a per unit fee or even a monthly fee or anything like that. And so, I mean, there's going to be more and more programs that are trying to figure out a way to do that model, where how can we really allow maybe somebody that wants to get into self-storage to still be able to do that and maximize their returns on their 10 units or 100 units. And, because again, now they might have to charge, $70 a month or $100 a month, when before they might have been able to charge $150 a month.
Right.
But there's 4 other people in the town doing the same thing.
Yeah.
So yeah, I mean, you're absolutely right. The more that, business always gets more competitive. Fees always, go up. And so that's one of the cool things about that, for sure, is it helps everybody in that scenario for sure.
Right. This podcast episode was brought to you by CC Storage. CC Storage is a property management software that helps you pass the fees of credit card processing onto your customers so you don't pay credit card processing fees ever again. If you enjoyed the podcast, there's a link below where you can fill out a form and be interviewed on the podcast with myself. If that interests you, please click the link below and we'll be in touch. We hope you enjoyed this podcast episode. Don't forget to check back next week for another interview with another self-storage property owner.